Hello friends, in another video we have discussed about the foreign exchange market, how global foreign exchange market works, right? बट when हम फॉरेन एक्सचेंज के बारे में जब भी कुछ बात करते हैं द फर्स्ट थिंग कम्स टू आवर माइंड इज़ अ फॉरेन एक्सचेंज रेट्स. भाई ये रेट्स क्या होता है? वी गो टू द बैंक, दे से दैट वी आर सेलिंग डॉलर एट दिस रेट और वी आर बाइंग डॉलर एट दिस रेट. नाउ इवन ऑन एयरपोर्ट also we can see this buying and selling rates. Friends, in this video we will try to explain this concept in a very simple way. So what is this buying and selling rates? So it is a foreign exchange, friends, is like a commodity. Do not treat it as a currency because foreign exchange is something which is other than our home currency. जैसा इंडिया का होम करेंसी क्या है? इंडियन रुपीज़. सो एनी करेंसी अदर देन द इंडियन रुपी इज ए foreign exchange for us. It is like a commodity. You can compare with any commodity like rice or wheat. हम जैसे राइस एंड व्हीट बाय करते हैं, सेल करते हैं, सेम थिंग दिस फॉरेन एक्सचेंज वर्क्स सो पर एज फॉरेन एक्सचेंज मार्केट इज़ कंसर्न. बट यहाँ खाली एक थोड़ा दो चीज़ अलग होती है. यहाँ दो टाइप्स के मार्केट होते हैं. वन मार्केट इज़ अ बिटवीन द बैंक्स, दैट इज कॉल्ड इंटर बैंक मार्केट, where one bank goes to other banks for its buying or selling requirement. Like SBI का एक्सपोर्ट कस्टमर है, उसके पास 10 मिलियन आ गया, he will go to Bank of India or Bank of Maharashtra or state Bank of Baroda and sell it to that bank. Similarly, Bank of India को 2 मिलियन के इम्पोर्ट के लिए कस्टमर्स को देना है, Bank of India will go to other banks and buy from them. So interbank market में a bank can be buyer or it can be seller. Okay, so ये एक बिटवीन द बैंक्स एक मार्केट होता है, दैट इज़ कॉल्ड इंटर बैंक मार्केट. और ये इंटर बैंक मार्केट में जो एक्सचेंज रेट कोट होते वो दोनों साइड से होते. लाइक अगर बैंक ऑफ इंडिया स्टेट बैंक के पास जाता है और बोलता है कि मुझे $2 मिलियन का रेट चाहिए, तो स्टेट बैंक ऑफ इंडिया विल से ओके, आई एम विलिंग टू बाई डॉलर एट 81 रुपीज़ 25 पैसा एंड आई एम विलिंग टू सेल द डॉलर एट 81 रुपीज़ 26 पैसा. बैंक ऑफ इंडिया को ज़रूरी नहीं कि वो स्टेट बैंक ऑफ इंडिया को बता दे वेदर ही वांट्स टू बाय और सेल. वंस द स्टेट बैंक ऑफ इंडिया कोट्स द रेट, yes, बैंक ऑफ इंडिया कैन से वेदर ही इज़ बाइंग और सेलिंग एंड द ट्रांजैक्शन इज़ डन. ये इंटर बैंक मार्केट होता है. दूसरा मार्केट जो होता है वो कस्टमर एंड बैंक्स होता है, जिसको मर्चेंट ट्रांजैक्शंस कहते हैं. इन इंटर बैंक मार्केट में हमने देखा है देयर इज अ डिफरेंस बिटवीन बाइंग एंड सेलिंग रेट. हियर फॉर इजी अंडरस्टैंडिंग I have taken a 1 paisa spread, that is the 81, 25 and 26. But friends, in actual market this rate spread is as narrow as quarter paisa, 1/4 of paisa, because 1 paisa on 1 million is a big amount, that is a 10,000 rupees. Okay, so quarter paisa also is a good amount, that is a 2,500 rupees. So banks keep buying and selling throughout the day, throughout the market hours. In case of merchant transaction, they come out with the standard rate. So here there we is a retailer, is a exporter, importer or general public like us, where we go for say pleasure trip or we send money to our childs who are staying abroad or who are studying abroad. Similarly, we get the money from our relatives abroad. Okay, so these are the various players who works in the merchant market, or we call it a customer transaction. So friend, as we have discussed, there are two types of rate. One is the buying rates and one is the selling rate. When SBI says that we are buying at 81.25, in interbank market this rate is also known as a bid rate. Okay, so they are bidding for dollar at this 81.25 rates, and they say that we are ready to sell dollar at 81 rupees 26 paisa. This rate is also known as a ask rate. So these are the terminologies used in the interbank market. And as I said, difference between the bid and ask, that is the buying and selling rate, is called a spread, right? Friend, this market is different from other markets in the sense because it is a global market and the transactions are done across the world. So there is a issue of time zone difference. Like when in the morning, if I go and try to buy Japanese yen, say at 11 o'clock, when actually India time starts in full speed, normally our dealing room starts at 9 o'clock, but by the time customer comes in, it is at 10:30, 11, because many of the branches start working at 10:30. So if I want to buy the Japanese yen in the morning at 11 o'clock, it is not possible, because by that time the clearing system in Japan is already closed for the day, or book transfers in the banks in Japan is closed for the day. Same thing happens with the Australia also, who are ahead of us in terms of time zone. तो इसमें क्या होता है, अभी अगर 11 बजे मैं किसी को बोलूँ तो टोक्यो का बैंक मुझे येन नहीं दे सकता. I can buy the yen for that day, but he will say, okay, I will sell you the yen today only, but I will deliver it tomorrow. Okay, so these are the different time zones. Similarly, throughout the day when we are working, United States of America is closed. Okay, in the evening when we are about to close, almost our clearing times are over, then United States opens, New York market opens. So it is not possible to deliver the funds for my purchase or sale on the same day. Okay, if I am selling the dollar, I can deliver on the same day, but if I am buying the dollar, I cannot deliver the rupee on the same day. And what is this foreign exchange? It is like a buying and selling one currency against the another. So जब हम transaction interbank में करते हैं, तो we should be able to deliver both the currencies on the same date. That is called a settlement date, right? So there are different transaction dates or maturity dates in a simple language that is used by customs in the foreign exchange market. The first is a cash transaction. Friend, don't mix up it with the normal cash जो होता है ना, उससे मत mix करिए. Cash means this is the maturity when both the transactions are settled on the same day. That means if I am buying the dollar, I am getting the dollar on the same date, and also I am giving the rupee to the seller on the same day. So both the currency funds are transferred on the same date. So if it is the same date, means it is a transaction date, it is called a cash transaction. I buy dollar today, I should get the dollar today, and I should be able to pay the rupees also today. If that is there, then that is called the cash transaction. Then Tom means tomorrow. Like I explained about Japanese yen, I am doing the transaction today, but I am going to get the Japanese yen tomorrow morning, right? And equivalent dollar which I have to pay for buying the yen is also going to be transferred to the seller's account tomorrow only. So the transaction date is a today, but settlement is happening on the next working days. This is called a TOM, or TOM stands for tomorrow. So this is a trade date plus one working date in both the currencies, right? And the third this maturity is spot, which is a very, very popular maturity. Spot date means transaction date plus 2 working date for settlement. Okay, so if I am doing the transactions on Monday in euro dollar, suppose I am buying euro and selling dollar, and all the transactions are happening on Monday. In a spot date, the transaction will be settled on Wednesday, when I will get the euro and I will also deliver the equivalent dollar to the seller. Provided Monday, Tuesday and Wednesday are working both in Eurozone also and in United States also. So that is called a trade date plus 2. And any transaction which is a maturing beyond spot date is called the forward rate. Suppose I want to send say $1 lakh to my son in United States, say in the month of August, that is on August 31st. Today I feel that the dollar rupee rate is good for me, so I should not take the risk, but I should freeze the current rate. Today I don't need to give the money to the bank, but I am taking the commitment from the bank that on 31st of August they will deliver me dollar at particular rate. So that rate will be spot rate plus forward premium. So once today bank freezes the rate, despite market movement, अगर रुपी 83 में भी जाता है, and suppose the bank commits say 81.25 will be the rate on 31st of August, I am going to get the dollar at 81.25 only, irrespective of the market movement. Okay, so this is a commitment. This is called a forward maturities. And friend, whatever rate we see in the newspaper or TV channel or various websites, they are all spot rate. So by default, rates are quoted in the market, interbank market, at the spot maturity date, right? Unless it is specifically stated, whatever we see in the market, they are called a spot rate. And when we say working days, that means the clearing system should be working in both the countries. In case of cross currency, that is like a euro dollar, so eurozone should be working and dollar should also be working. For USD INR, it should be India also should be working and the United States also should be working. If any one country is having the holidays, the settlement will get shifted to the next working days. So these are about the maturities. This is required because in the next slide we will come to know why this is important. Friends, here one transaction is there. Inward remittances has come. One exporter has received $1 million yesterday only. Bank का account में credit आ गया है. Now today bank need to quote them the exchange rate. It's a friend. It is not like a retail customer when the bank will have a standard rate system and the customer has to follow it. In this case, customers will bargain for a very very fine margin. 1-2 पैसे से ज़्यादा कोई नहीं देता बड़े ट्रांजैक्शन के लिए. So let us hope that this customer has a agreed margin of 2 paise with the bank and how the bank will quote the rate for this transaction. As I said, all the rates appearing on the screens, Reuters screen or Bloomberg screen, they are for the spot rate. So here bank is buying 1 million for the customer. So bank will take the buying rate. So spot buying is 81 rupees 25 paisa. Now as we said, this cash transaction is there because dollar has already been delivered to the bank and the customer will expect or will require bank to credit the equivalent rupee to his account on the same day. So that is a same day transaction. Both the currencies will be exchanged on the same day. In fact, dollar has already been exchanged because bank account is already credited. So this is a spot rate. We need to convert into cash rate. So there is a cash spot market. It is separately quoted premium on the screen. So here cash spot premium is say 2 paisa. 0.02 means 2 paisa. So what as a banker I will do? Spot rate 81.25 paisa minus cash spot premium 2 paisa. So here cash spot interbank rate will be 81 rupees 23 paisa. Then bank will have some margin because it is doing the transaction. So here for this customer, as we said, the margin is fixed at 2 paisa. Okay, it is understanding between the bank and the customer. So here what I will do, spot rate minus cash spot margin premium minus margin, that is 2 paisa, and then the net rate will be quoted to the customer will be 81 rupees 21 paisa. That is 81 rupees 25 paisa spot minus cash spot premium 2 paisa. It will become 81 rupees 23 पैसा हो जाएगा ना. उसमें से हम क्या करेंगे, 2 पैसा मार्जिन कम करेंगे. So 81.23 minus 2 paisa. So net rate will be 81 rupees 21 paisa. So this 1 million will be converted at 81 rupees 21 paisa and the customer's account will be credited with the equivalent rupee, right? Friends, then this is the cash. Take another example for a easy understanding. Okay, I am going to, as a customer, I am going to get $1 million exactly after 1 month. So I want to go to the bank and say that I want to freeze my rate today only. I don't want to take the exchange risk. So please quote me the rate when for the delivery of dollar exactly after 1 month. Here what bank will do? Same thing. All the rates as we discussed are quoted at spot rate, that is 81.25. Bank is buying here, the customer is a seller. Then 1 month premium will be added because dollar rupee is at the premium level. Future dollar is always costlier than the present dollar. Okay, because of the interest rate differential between two currencies. So here 1 month premium is say 0.23, that is the 23 paisa. Okay, and the margin is 2 paisa. Same customer, 2 पैसा उसका मार्जिन है, चलो हम 2 पैसा लेंगे. Now we have to quote the rate to the customer, that is the net rate will be 81 rupees 25 paisa plus 23, right? So that is a 81 rupees 48 paisa minus margin of 2 paisa. So net rate to the customer will be 81 rupees 46 paisa. Again I will repeat, spot rate 81.25 paisa plus margin 1 month premium 23 paisa and minus margin of 2 paisa. So net rate will be 81 rupees 46 paisa. So irrespective of the market movement, even if dollar goes to the 80 rupees also, on the date of delivery, bank is going to pay to the customer at 81 rupees 46 paisa, right? Friends, as Other side, there's another market called the merchant market transaction, small value transaction. Bank specifies the rate in the morning. If there's a volatility in the market, bank keeps this card changing. Nowadays, because of the computerization, things have become very, very easy. Banks can change the rates in the system at any point of time. So here margins are fixed by the bank, and this is for the retail customer who are not in a position to negotiate the finer margin with the banks. So here buying and selling rates are quoted by the bank following the same exactly basic principle as I discussed in the earlier examples, right? So it is only standardization, nothing else. So you can see these rates appearing for the transactions with the customer, and these are all cash rates, because normally as a customer, when I go to the bank, I expect the bank to do the transaction on the same day. Send money to my son, that is on the same day. Debit my rupee account also on the same day. So these are the same day rates, except bill buying rates vagara, where the money can come subsequently, right? So this TT buying and TT selling are exactly cash rates. Okay, and TT selling is used for the outward remittance. TT buying is used for the inward remittance. Bill buying is used for the export bills, and bill selling is used for the import bill payment, right? Traveler checks nowadays are hardly used, but if at all somebody is doing, the separate rates are quoted for traveler checks. Similarly, currency buying notes are also specifically given in the card rate by the respective bank. Purchase of instrument rates are also quoted by the banks, but nowadays most of the transactions are happening through SWIFT. But earlier checks or in foreign currency used to be discounted by the bank, and for that purpose this rate is used. So it is just for academic now. When banks quotes the rates to the customer, the dealers have such screens before them where they can see the actual rate. Whatever you see on this screen is the actual rates, where at which rate they can buy and sell. So based on these rates, nowadays the rates, cross currency rates are also readily available on the system, like euro, rupee, GBP rupee, Japanese yen rupee. So banks, dealer don't need to do the cross currency calculation manually, as was the case earlier. Now it's very easy. They can directly buy euro and sell INR. Earlier, for buying the euro, necessarily the transaction has to be in euro, dollar, and then dollar rupee. But nowadays these transactions are not required. But for high value transaction, even today most of the banks, they do the transaction through cross currency only. So this is a dealing station, we call it. They are available with all the banks nowadays. And the next, this screen you see, this is the Reuters screen. This is the only for information, where you can the dealers will be getting various rates in currencies and forward premiums, all other rates are. This is just a information rates, they are not a dealable rates. Dealable rates are on the dealing screen. Friends, this was the only attempt was to introduce you to the basic concept of buying and selling. I hope you enjoyed the video. I request you to please subscribe to this channel so that you will get the next video when it is posted immediately. Thank you. Please share and subscribe. Thanks a lot.